Alrighty, what's up guys? It is the 31st of October. It's the last day of the best month of the year. And it's Halloween, so happy Halloween. For those of you with kids, hopefully you had a good night trick or treating. Hopefully your kids are in a nice sugar coma about to crash for bedtime. But we'll jump in here, my friends. It's been about a week and a half since I uploaded the video. And I've been focused, man. I'm dialed in right now. I'm out for blood. But as far as the market here, the bullskis have made a little bit of progress over the last week or so. So as always, we are not going to marry any ideas. All right, you marry the girl that can make a good lasagna. You don't marry any ideas. But as far as I see it right now, I do think we got enough here to work with in the short term to potentially see a path for the market towards that daily 200 around 4,100. The big old 41 hundo. So what I want to focus with you guys, what I want to focus on here tonight are some comparisons in the current market to the market you had back here in August. And of course August was pretty special because that's the last time we actually rallied for more than 2.5 days. So we'll make the video quick, guys. I gotta do some family stuff here. But as far as the progress, real quick here, pieces of the puzzle. The volatility index, for now, definitely making it a little bit easier to potentially see this market trade a little bit higher. Under the 21, under the 50, under the daily 200. And you got a couple of lower time frame sell signals. And you're firing a daily squeeze to the downside. So obviously that's a big change over the last few days here. Up until last week, the VIX it's bullish. You're pumping out some buy signals, you're squeezing, you're holding above that 21 EMA. So that flush, good for the bullskis. Next up here is HYG. And it's pretty simple. If we're going to get a August-like rally in the S&Ps, you have to get an August-like rally here from HYG. So, signs of improvement. Daily squeeze. Positive histogram for the first time since August. You cancel out that daily sell signal for the first time since August. And you're trading back above that daily 21 and the daily 50. So, signs of progress there, guys. Now, the one that's a little bit on the fence, a little bit suspect, as the kids would say, is the dollar. The old dirty dollar. So the question here with the Dixie Trixie is really whether or not this daily squeeze fires to the upside in the direction of trend, like that daily squeeze, like that daily squeeze, like that daily squeeze, like that daily squeeze, like that daily squeeze. I mean, basically all year long, it's been a series of bunch of sexy daily squeezes. So that's a question. Now, if this fires to the upside in the direction of trend, well, then the chances of the S&Ps rallying all the way back to that daily 200, pretty slim. In the event she fires short, well, then I think that daily 200 is in the cards. So that's to be determined. Got to make sure you keep a close eye on that. But as far as HYG and the VIX, they're definitely helping out the bulls for now. So a little bit of progress on that front. Now, as far as the market here, Big Mamacita S&P 500 is a preface here, guys. This is all short-term thinking. I think maybe we got a path here to the daily 200, maybe a little bit higher, and that's about it. Right, I'm not trying to buy calls for February expiration. I'm not trying to get long and hit the beach. All short-term thinking. So keep in mind, nothing's changed about the issues here on the monthly chart. What are the issues on the monthly chart, Taylor? Well, I was hoping you would ask. Monthly squeeze. First negative histogram since 2008. Right, that's right. The financial crisis. And we're under the 21 EMA. So the rules of the squeeze would imply squeezing under the 21 EMA with a negative histogram. Probability suggests that squeeze fires short, so that hasn't changed. But I think more applicable here to the shorter term, we're in a weekly downtrend. And all the downtrend is a series of lower highs and lower lows. So there's a high, there's a low, we get a big ass rally, right? A big whopper, cheese on the side, there's a lower high. In other words, we didn't change squat. There's a lower low. So technically speaking, and we'll see if we get there, but just the point being, that pattern, right, that weekly downtrend dynamic, totally valid here, even if we rally upwards of 4,200, right? We could boogie all the way to like the weekly 50. That pattern is still valid. You're making lower lows and lower highs. So keep that in the back of your noggin as we operate through the short term. Now, as far as the short term, signs of progression. Comparisons to August. Daily squeeze, positive histogram. Right, first time since that rally back here. We are above the 21 EMA. That's big. We're above the 50. And we've canceled out the sell signal here on the daily chart. And every other time frame. None of that has happened since August. Right, that little rip here in September. All these little BS pops back here. None of these changes were taking place. Now the door is open because these changes have unfolded for a little bit of trend in the short term. Right, and there's your target. Daily 200. So here's the theme, guys. Well, here's been the theme as of late. We get these big rallies. Everything starts to improve. Right, 21 on the hourly chart. Like you're back above the 21, you're back above the 50. Positive moving average cross. There's signs of hope. But look what happens on the first dip. Craps the bed. Right? Look what happens back here. Huge rally. Here comes the bulls. Rah! And look what happens on your first dip. I guess that's what a bull sounds like. Your first dip. Right? That's not trend. That's the difference. Here's what I want you guys to understand. Like, this is a really... not sure what the right term is, but like, if you can understand this, you'll become a better trader. We are not in a weekly uptrend. I mean, you could argue that. Let's just say we're not. We're definitely not in a weekly uptrend. We are not in a daily downtrend. So guess what? If we're going to rally to 4,100, what that means is all your lower time frames, they have to be in an uptrend. Did the weekly chart go into an uptrend back here in August? No. Did the monthly chart? No. What went into an uptrend, right? What triggers that big reversal? It's all your lower time frames going into an uptrend. What's an uptrend? An uptrend is a series of higher lows and higher highs. So notice, guys, here's the change, right? Here's the shift. Back above the hourly 21, back above the hourly 50, positive moving average cross. There's your high. There's a low. There's a higher high. There's a higher low. There's a higher high. Now you see from here. But for the first time since August, under the surface, 15-minute chart, the 30-minute chart even. All right, check out the 30-minute chart. Buy signals, positively cross-moving averages, higher highs, higher lows. So finally, for the first time since August, the progress they've made, they're finally keeping it. If that theme can continue, that's what can take us, I think, towards that daily 200. What we can't afford is this stuff. Giving back all that progress. Losing the buy signal. Breaking the structure. We can't afford that in this market. But on a day like today, where the S&Ps are down 1%, you can't focus on that, right? That shit's meaningless. Structure and price action, that's all that matters. Yeah, we're down 1%, but look at the hourly chart. It's freaking perfect. You dip to your hourly 21, you're cranking out a buy signal. It's beautiful. All right, what about the QQQ? What about the Q-tips? The Qs are just fine. All right, you're down 1% today. You're hanging out near your hourly 21. All right, all the progress they've made back there, they're keeping it. You hold the 50, you get a big rip. Everything behaves here. So, again, it's all short-term thinking. But if moving forward, if everything can hold up, we get a dip, we hold structure. If that continues to be the pattern here, and you know what, guys, let's not even put a big target on it. Let's just say this. And yeah, for what it's worth, the daily 200, probably a pretty good target. But more importantly, take the progress they've made, take that basic mindset, right? That basic understanding of a trend. An uptrend is higher highs and higher lows. As long as that continues, I think you got a little green light here to buy that dip in the short term. So, a couple of setups here for you guys, and then I will cut you loose, let you move on with your Halloween. So a couple of names here, One that we really like, and we actually took profits here this morning in the Mastery, is General Mills. It's so textbook. So if you guys want to check out the Mastery, we'll have the link in the description here for the $7 30-day trial. But this is textbook. Uptrend, daily squeeze, whole bunch of buy signals on the lower time frames on the big 3 indicator. So we bought that here on Thursday, and we cashed out this morning, I think for like 50%. Just about a 50% return on the calls. So, any dip here, whether that be a dip to the daily 21, whether it be a little dipperoonie to the hourly 21, might be a pretty good opportunity. We will jump in. That's for sure. So, General Mills. Next up here, guys, is NVIDIA. So for NVIDIA, we took profits in a couple of trades here on Friday. So here's what I like. This is what I call the reversal trade. You're oversold on the weekly chart, trading under the weekly 21 EMA. So that weekly 21 EMA, look at that as a big giant magnet, right? Even in a big downtrend, it's always calling for price to come back home. Like just come home, give me a quick smooch. Then you can be on your merry way. So there's a big target up there around 150-ish. Now, being oversold, it's not enough to cause a move all the way back up to that weekly 21. What can cause a move back up towards that weekly 21, which, mind you just saw in the S&Ps, is when you're oversold on the weekly, but then all your lower time frames begin to rebuild. Close back above that daily 21, positive histogram, no more red arrow, so that means we canceled out the sell signal on the daily chart, and then your lower time frames go bullish. You're not in a weekly uptrend, you're not in a daily uptrend, but here's the theme, guys. You close back above the daily 21 EMA while your lower time frames go into a trend. That's what can trigger these reversals. NVIDIA's been oversold for a long freaking time here. But the lower time frames never got into trend. Rebuild, huge fail. Little rebuild, huge fail. Rebuild, big old fail. Now you've rebuilt, and you're keeping that progress. Riding that 21 EMA, riding that 50 like a good old donkey. So for NVIDIA here, buy signals on the 1 hour, buy signals on the 30. What I'm looking for is a little bit of a dip, and we're trying to get long again. Parlay the profits into the next trade. So the game plan would be get long on a dip, exit on a close under the daily 21 EMA, upside target of about 150. So we like General Mills, we like NVIDIA. Next up here, guys, is Tesla. Now Tesla, we're looking for the same trade. Looking for a pushback towards 250, 260, but we gotta close above that daily 21 EMA first. There are signs of progress here. For example, the hourly chart. That definitely improves. positive moving average cross, you hold the 50. The 30-minute chart, that improves. But what I want to look for are the signs of improvement on the lower time frames and the close back above that daily 21. That's what I think can trigger a move here in Tesla. 250, 260, probably pretty quickly. So as soon as that closes above that daily 21, we're going to snag a little bit of that. And a few more here, guys. A lot of them have earnings, so I'm not going to show you anything that has earnings in like a week or so. One name that I missed today. Check this out. This is sickening. Freaking First Solar, man. Up 10% today. And somebody called this out in the options room. If you're that individual, great call out. I dropped the ball on this one. Daily squeeze. Fresh positive moving average cross. Fresh daily squeeze, right? Fresh out the squeeze womb. And a crap load of buy signals. Daily down to the 15-minute. It's so textbook. And I didn't trade it today, so tonight I only eat 1 pack of ramen, not 2. Any dip here, I like First Solar for a swing. So GIS, Tesla, Nvidia, First Solar. I probably got one more here for you guys. One more for the home team. Oh, of course, Oxy. We bought some calls here on Oxy today, so energy looks pretty damn good. Fun fact. Energy is the only sector out there right now, to my knowledge, with a big 3 buy signal on the daily chart. That makes it a little bit special. So for now, I think energy names are looking pretty clean. So our pick here today was the big old Oxy. So textbook, guys. So check this out, right? And I'll keep you updated. Doesn't mean this trade works. But this kind of setup, right, this exact setup, my goal is to take that every single time it's presented. Like, there's the trade. You can make a living trading nothing but this one setup. To the upside, and you trade the opposite of the setup to the downside. You really can make a living trading nothing but this setup. It's so textbook. Daily squeeze, check. Big 3 buy signals. Daily 4 hour, 2 hour, 1 hour. Right near that 21 EMA. It's what we had here in General Mills. Trend, squeeze, buy signals. That's why I love the big 3 indicator. Soon as I pull up Oxy, and guys, not a sales pitch, but the indicator is like $300, $400. I say this as a friend. Like, you guys know I've been making videos like for years, before we built the indicator. Like, I'm really confident it'll provide you a really good return on your $400 investment over the course of your long trading career, because it's so simple. As soon as I see Oxy this afternoon, I gotta jump in and get some calls, right? That's the trade. Daily squeeze, all the pretty colors. The indicator tells me daily 4 hour, 2 hour, 1 hour. They're locked and loaded. 4 hour locked and loaded. 2 hour locked and loaded. Does not get any better than that. Doesn't mean the trade works, but it's my favorite trade. So for Oxy here, exit under the 21 EMA. Looking for a push here towards 77.80. Somewhere in that range. So that's it for tonight, guys. Oxy looks good. Energy looks good. Nvidia, signs of improvement in the short term. So trying to play that for a move up there towards 150. If Tesla can get its booty back above that daily 21, we'll look for a trade up there towards 250, 260. General Mills was good to us, and it was so nice I want to do it twice. So if that can dip, we're jumping back on that bad boy. And really, to be honest, if you are if you're looking for more upside here in the short term, trade the S&Ps and trade the QQQ. Nice and simple. Covers a lot of your bases. But there you have it for tonight, guys. As always, it's a pleasure doing business with you. And I hope you guys found these videos helpful. So, let's do something fun here. If you stuck around this long, let me know down in the comments what was your favorite Halloween costume ever. If you can remember all your Halloween costumes as a kid, or maybe you're still trick-or-treating, that's cool. What's your favorite costume you ever had? My favorite, I want to say 5th grade, Pimp. Purple Pimp outfit. Purple Pimp hat. Purple Pimp coat. Zebra trim. Pretty sure I had some shades. It was the start of my entrepreneurial career. But alright guys, hope you have a great night. Happy Halloween. Hope you found the video helpful, and I'll talk to you in the next one. Adios.